taking an unconventional look at stocks, property, bonds, economics, and more. This is the Total Money Management Podcast with Steve Moriarty, Tom Hill, and Jacob Senior.
Welcome to the Total Money Management Podcast. We're going to be going over the week that was October 7 to 11. How are we doing, gentlemen?
I'm good.
Top of the morning to you, lads.
Tell you what, it's warm now.
Not in here, though. Lovely.
Got to start the conversation with the weather. Yeah. Oh, hot outside.
It's been hot and windy. I was actually supposed to
You're English, mate. Anything over 21's bloody hot to you.
I'm melting. I was actually supposed to be in a flying lesson this morning. That's why I was...
What, as a pilot?
A pilot. No, yeah.
Are you going for your pilot's license?
No. A friend of mine, one of the people that I work with, her husband is a pilot, and he wants to take me up to test it out. So,
excuse me?
Yeah, I was going to get on the tools. That's why I didn't tell you blokes, because you'd be taking the piss out of me.
On the private jet?
Not a private jet. It's a little tin can thing. But I was next week is the week.
Best of luck. Yeah. Now this is a serious story. When I was in a regional director out at Ipswich, I knew a guy out there. I knew his wife on a personal level because she was a friend with my sister, but I didn't know her that well, right? But it's like, blah, blah, blah. It's like, okay. Anyway, her husband was a pilot. I won't go into too much detail because it's a bit of a weird story. But anyway, he said to me, we're trying to get an aero club going out here, right? Because they had a sort of airstrip and blah, blah, blah. Anyway, so I went, yeah, right. And he went, you should come up in the plane. And of course, me being a dickhead, went, yeah, that'd be great, thinking it'll never happen. Righto, when are we going to do it? So anyway, long story short, I get out there and I'm like, what are we going up in? And I'm not kidding, mate. It's this old biplane. Right? It's like a 1950s thing. And I'm like, this is...
With the propeller on the front.
I'm going to die, I'm going to... And he said to me, I went, let's call him Bob. I went, Bob, that plane looks really... That plane's really old, Bob. And he's like, no, it's actually better than... And I went, righto. So he took me up flying around, right, 15, 20 minutes. It was really interesting. Anyway, landed and it was like, thank God that's over and done with. Anyway, without a word of a lie, about 4 years later, he was involved in an accident and died.
Oh, gee.
There you go, mate. Have fun next week, buddy.
It's actually safer than driving, I think.
He hasn't been flying for 4 years.
Have you left your 33% of total money management to us?
It's in a trust account.
Righto, what do we got, lads? What do we got?
All right, so we're still talking about housing. We're talking about Oktoberfest, high rates, higher loans, Cape Day comparisons, and car talk.
Beautiful.
And we've kicked the big issue off with Australia continuing our love affair for property.
Yep.
As we kind of go through a little bit below, lending's still strong even though rates have risen, which kind of does make you question the connection between level of interest rates and the borrowing.
Yeah, that's right.
Well, this is linking. Everyone's buying existing properties still, so there's no new properties, or there are. I won't say no. Fewer new properties being built, not generating growth in the economy, and everyone's just buying and trading.
Yeah, buying each other's properties. The problem with that, what I'm trying to point to there is the problem with that is it's unproductive debt. That's really the problem. See that figure there, 14.68 billion, right? So 14 billion is being spent every month with Tom buying Jacob's property and me buying Tom's property and Jacob buying my property. Existing property, right? For higher prices, generally, not all the time. But the issue with that is unproductive debt. Now, I've gone, and I think I spoke about this a little while ago, but I've gone back through it, and we're roughly spending about 1% of GDP, which is about $200 billion a year, buying each other's properties. Now, that is unproductive debt that's got to be paid down by somebody. And the point I'm trying to make there is that's not good. So what you'd say was, would you like to spend $20 billion a month buying each other's properties, or would you like us to spend $20 billion a month building factories that are going to make, cars cheaper or... that is productive, like enhance your standard of living. If you buy my house, nothing's changed. I go out and you move in. That's it. If I spend $20 billion a month on new machines, new techniques that improve productivity, I used to make 10 cars, now I can make 15. You go, that's excellent.
Well,
but if I
private investors look at that and go, I don't give a shit. Like we're in a bubble. I can buy something for $1 million and sell it for 1.5.
Well,
in a
Did I
year.
make money?
Yeah.
Yes, yeah. I think there's a few things going on, but one of them is generally what you point out, which is it's just the hot asset class at the moment, and so everybody thinks that it's a good thing to be in, and that's where, like you just said, Jacob, about new houses.
Yeah.
Right. Well, they're hardly building any. Well, if we've got a population boom, where are we all squeezing into? Right, and it's the builders can't build because the cost of building is too high.
Yeah.
They're land banking. You know, they're not bloody well releasing a lot of land, all this sort of stuff. But that's by the by. My point here for investors is saying, listen, if we're just buying each other's properties for more and more money, guess what? Someone gets holding the can at the end where they go, I bought Jacob's property for 1.6 million and now I can't sell it to anybody.
Yeah, there's an end date to it.
Yeah. So, you know, that's what I'm trying. And, you know, as I mentioned there, if you go to the blog and look at Warren Buffett's, the last 3 blogs have been about Warren Buffett talking to the GFC Commission. And he's got some really interesting points. And it's really simple stuff. Listen, everybody was in on it. Right? You know, real estate agents loved it. Banks loved it. People loved it. Furniture people loved it because people were redecorating. Tradies loved it because people were renovating. So everybody who's in on the gig is not going to be one person's then there saying, oh, yeah, we really need affordable housing.
Yeah. Well, it comes back to the yield that we talk about time and time again. Like the yield on these properties are now, what?
1 or 2. Now, the capital gain might be 10.
Yeah.
But the yield, if you're going to hang on to it, is way less than you can get in cash, bonds, or in an index fund.
Yeah.
But can you make 200, 300? Well, maybe. Those large amounts seem to be slowing down a bit. But, you know, that's what everyone's aiming for.
It's interesting. I was down at our head offices in Sydney this week, and I work in part of private equity, and every single person cue the shotguns. Every single person
At least you know it.
Yeah. All the analysts, do you think they talk about capital gain? Not a chance. It was all the conversation for 2 days was what's the yield? What's the yield?
Yeah.
What's the yield? We're buying this property for 30 mil. What's the yield?
Yep.
And
That's where the inexperienced people get caught.
yeah. So the private investors are looking at capital gains, and the people that are actually making money are looking at the yield. Anyway, I thought it was
because they're going to hold it for a long time, and also too, if you're going to sell it to somebody who's rational about the investment. So if I buy something for $100 and I think, I'm going to sell it for 150, right, and it's worth 105, or even horror, it's worth 90, and Tom comes along and says, "Listen, mate, I'm interested in that." You go, "Yeah, it's 140," and Tom goes, "Mate, it's worth 97." And I'm going, no, dude.
Promise
Tom
you.
knows what he's doing, right? And they're saying, "I'm telling you, buddy, it's yielding 3%. I'll give you, 97." And eventually that happens. Eventually the voting machine becomes a weighing machine, right? And the weighing is you look at it and go, "Well, hang on, I'm not paying that much for that." That's why I'm saying this buying existing properties is really, really dangerous.
Keep coming back to the hot potato thing.
Yep.
Monday. What's going on Monday? S&P average monthly return since 1950. Essentially, it's showing that it's only ever been really, really good.
Yeah, during election. Well, is that during election years?
We can talk to that. But
Right. Sorry. Yeah, you're right. Yeah.
I mean, post-election. I mean, we're expecting the next few months to be quite strong in the American stock market.
Yeah, sorry, you're right. Yeah, there you go. Election years, October is usually down nearly 1%.
Yeah.
But as I keep saying, look at November and December. Good times, folks. Get in there.
Yeah.
Mate, there's a lot can happen in the next sort of 11 days or so.
Yeah.
There's still time.
I have to say I'm a wee bit nervous about the US election.
Yeah.
Well, you see the polls come out mostly in Trump's favour.
Yeah, but apparently that's a political strategy. Apparently the argument is that one reason put forward is the Trump people are putting out all these polls which show Trump leading to make people think he's going to win, which then makes people think, okay, well, I want to be on the winner. I'm going to vote for the Donaldo.
Wow. It's all
Corrupt.
corruption. But obviously
Hallelujah.
not financial advice, but the next couple of months have always been pretty good.
Statistically, the evidence presents that, you
guys are killing it in Well 1.
Santa rally.
Well 1's been good to you in October.
Well, one has been kind.
well, one is always kind.
We're going to the Maldives. Tuesday.
Righto, Tuesday, what do we got?
So Tuesday, talking about the link between interest rates and demand for loans, but more specifically investor loans in the chart that we've shown on the Tuesday. The belief being low rate generates high demand for loans. But here we see higher rates and higher loan demand. So
What the hell?
I think just
It's backwards.
the key here is there's still demand.
The key here is don't listen to economists.
Yeah.
Righto? That's the point. The bullshit of, if you lower interest rates, you get more loans. Okay, well, we've just raised rates and we've got more loans. How's that work?
Well, you lower interest rates because the economy's struggling, so why the hell would anyone borrow?
Borrow, yeah. Growth's at 0.5. Hey, leverage up, dude.
Yeah, I feel like, no, mate, I've got 2 mortgages to pay off.
Yeah.
Mate, when the rates are low enough,
But,
though, easy to make money.
On a serious note, what I'm saying there is you get all these, and this was on the socials where people say, and even in the mainstream, everyone's going, the RBA's got to cut rates and then house prices will rise again with people borrowing. Now, okay, that may well happen, but that doesn't mean that if rates are rising, then things are going to stop, right? Because what we're showing here is saying, well, hang on, they've increased rates, like 10 times and people are still borrowing money. Right, so the argument is, well, how can that be if we say lowering rates? And again, if you look at the blah 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 S&P 500 in 2000, Alan Greenspan cut rates, 5 or 6 times. The stock market still fell 50%. Yeah. Right? Why? Because the valuation was at 44. Right? Cape was at 44. Things were absolutely crazy. So this thing about interest rates drives everything is like, no, I'm sorry, it doesn't. The thing that drives a lot of stuff is government spending or private borrowing. And if people say, I don't give a shit, interest rates going up, I'm going to buy that house. That's what they're going to do. If they get a wage rise, what do most people do? They end up starting to spend more money. I'm going to buy a new car. Why? Because I just got a raise. I'm going to buy a bigger house. Why? Because I just got a raise.
Because I can afford
Well,
it.
yeah, they can service the loan regardless of whether it's at 3% or at 13%.
Well, interestingly enough, actually talking about the socials, the guy who messages who works for one of the banks saying that he's looking at people's accounts and their savings accounts are dwindling, paying these mortgages down, and he was flagging with us that this is actually a real, the accounts that he's looking at, this is actually happening. So people are renting their savings accounts and now struggling to pay their mortgages and things like that. So,
see, now this week, which is October, whatever it is, what is the date? 15th or no? 18th or
19th.
19th. October 19th. What the thing with the rates is economists are trying to predict when the RBA is cutting rates. And the RBA keeps saying, we're not cutting rates until we get inflation under control. Now the wage figures came out this week, or unemployment, I think, and it was quite good. So the RBA's out there going, we are not cutting rates. So now they're talking about next April before they start cutting rates. So the mortgage holder or the investor has got to say, righto, I'm up for whatever the rate is until at least April. Mm. So instead of saying, that's cool, I can hang on till December, then they'll cut and I'll be okay. Now they go, Jesus, now I'm out until April, right? And at some point, like you say, Jacob, people get to the savings and go, there's nothing left. So now we've got to sell.
Well, it's timely because you and I, obviously, when we caught up earlier, we're kind of talking, when you look at investing, sometimes you just got to peel it back and start to look at things logically. And you go, right, okay, people trying to enter the housing market now as a first home buyer.
Yep.
You think, fuel's more expensive, groceries more expensive. We know why that is, because everyone's got more pressure for how much everything costs. Then they've got to try and get a deposit together in that environment, like at what point does it actually start to have an effect and, impact the amount of people going for these loans? Because it seems to me like it's people who are already in the game that are playing the game at the moment.
Yeah, Tom, and it's like we talked about, it's the unexpected event. So you can't pick the top, right? It's absolutely time wasting to sit there and try and pick the top because you can't do that. All you can do is say, at some point it rolls over, right? Whether it's bonds, whether it's stocks, whether it's property, whether it's NFTs, whether it's vintage cars, everything gets to a point where people say, you know what, I'm not buying that, right? Because it's just too goddamn expensive.
No, sorry, you finished.
Yeah, well, just and this is the really important point: is it's the unexpected event. I can't tell you what it's going to be. It could be a bloody war in Romania, for all I know. That is the catalyst, and then that may not be the catalyst. It's just some random event. And what the markets usually show is it's not a big event, right? So you don't wake up one morning and go, Russia's invaded Germany. Holy hell. And the stock markets all fall down. And in 2 years, you go back and go, look at that. It was October the 18th when Russia announced it was invading Germany, right? It's not like that. Sometimes, and most of the times, it's just like, what happened on October the 18th? It's like nothing. It just rolled over and that was the way it worked.
It was
right? And that's what makes it so hard, right? Because you can't look at it. And as I've said before, if I said to you, Tom, I'm telling you, mate, 100%, it's December the 12th. That's the turning point. You'd invest everything up until December the 11th and then you'd sell, right? But you can't do that because you don't know all you can do is say, listen, it's really, really expensive. Your choice. And I think we wrote in the newsletter this week saying you can either jump it, you can stay in the disco but dance close to the door, right? You can say, all right, I'm going to short the market, or you can say, okay, I'm going to look for cheap, long-term investments. Mm-hmm. There's really the only three things you can do.
Asset allocation is so important. And just to add to that, you really only hear about people that are winning, right? So there are people telling us, writing to us saying, we are seeing people that are losing. You don't hear about them. You only hear about the people that have made X amount of money or sold all these properties. Or there was something on social media this week. Old mate that owns evidence-based training has just bought an $11 million house on Gold Coast. Like, you only hear about the winners, but there's probably 100 other people that have bought a $5 million house that now can't afford the mortgage.
Well, there's plenty of losers. You just got to there's a few on X, X or Twitter where they bought it for $2 million. Most of this stuff where they're losing money is people who bought at 2% in the pandemic, right? They bought a place in the Mornington Peninsula. It was $2 million. Now they're trying to sell it for 1.7 or 1.8 or 1.9. But point being, they're losing dough, right? And there's people out there losing money. But that's the way markets work. But, excuse me, you're right, Jacob. Who wants to hear about the losers? It's not exactly good for the good. Hey, we got another loser over here, folks. It's like, oh, good, okay.
We should call us the loser podcast.
Shout out to the losers out there.
Keep going.
But you know what I mean? Like, on a serious note, it's really painful when you use leverage. And again, Buffett talked about that on the blog. I talked about it on the blog. Buffett talked about it and said, if you use leverage, you can do really, really well. But boy, oh boy, you can do really, really badly. And my argument is, in asset markets, they're a zero-sum game. Some people win and some people lose. And if you lose a little bit, it's like, yeah, well, I'll chalk that up to experience. But if you lose a lot of money, it can be bloody life-changing and not in a good way. Right? And that's what happens, like in the US GFC. There were people handing the keys back because they had no equity, right? There were people who said, we've lost, 100,000, 200,000, which is big money to a lot of people. And it's not like you could go, oh, well, that's all right. I'll just make it up again in the next 6 months by, wages or something. It's really dangerous sometimes.
Dancing close to the door, I might use that one. But linking it to Wednesday and finding cheap markets, this if you subscribe to the week that was, you'll have this in this week's or last week's, letter. But if you're not going to subscribe, it's basically a link to the countries, different countries' CAPE ratios, so you can see what's expensive, what's not expensive, and hopefully it can help with your investing decisions. Anything more to add to that?
No, go there and look at the cheap countries.
Cool. Thursday. Household debt to disposable income once again. Australia's soaring high.
Look at that. Punching above our weight again.
God. Well, we've just talked about it, but remember how damaging the US property bubble was to the economy. Now everyone's arguing that it's different in Australia. We're unique.
Yeah.
Did you know that?
So US at 97, Australia at 184.7.
in the GFC, Australia were the US were at 130, just to provide some context.
Yep, and we were at 160. Now we're at 185. Right? Like, sorry, we're going to do a property special soon. But household debt to income. That's insane.
No wonder savings accounts are dwindling.
Well, no wonder house prices are going up. If people are borrowing, they got to be buying something. Well, they're buying houses. It's really, really simple. They're not buying, you can't get that debt level buying TVs. This is why I say it ends sometime.
But that's just a percentage of debt to disposable income. So could that figure also be higher because there's less disposable income?
Well, it could be, Tom, or it could be a little bit lower, and it's always about the average and that sort of stuff. But the general point is it's an indicator where you go, man, we're starting to get a little bit, we're starting to get right up there.
Yeah, things are tight.
Well, that's why I say at some point, Jacob says, dude, you can offer me a loan at 2%. We'll give you 1%. I don't care. I'm maxed out. Right? I don't want to borrow any more money. And that's where you get trouble, because when people are not borrowing, that means house prices or property stock prices must fall. Right? Because there's no more money coming in. Right? And that's what I don't think people are realising. Can it go on for a long time? Absolutely. Right? But again, look at China. They're now really struggling with the property market. Right? And this is my point of saying to people, look, please stop thinking Albo's going to actually solve the problem. He can't solve the problem. Right? And so you've just got to look at it and go, there's a whole load of debt out there that has to be paid down. So how do you pay it down? Who pays it down if householders all tip out their pockets and go, you know what? We can't afford it. And that's what happened in the US. Right, so the government said, all right, well, we're going to have to bail out the banks because the banks are in debt. The people are in debt to the banks. And the US made the mistake in bailing out the banks rather than the debt holders, right? But that's why I say all debt's got to be allocated to somebody. And if it's household debt, you've got to pay it back. You can't say, oh, well, I'll just give it the flick. Well, you can't. You've got to pay it back. Right? And if you get a mass, I can't pay it back, you get a mass problem.
You know what that's called? A kleptocracy.
Well, it's called a bloody panic in my book. Anyway, Friday, what do we got?
Well, we're talking about Chinese auto exports being a problem again.
Wow, again.
Mate, well, if you haven't heard before, it's a problem. So,
guys, the charts.
Well,
we haven't done the charts.
What charts?
The pictures.
Right. Dan's going to edit it in. It's all going to work
good on
out.
You, Dan.
It's going to work out.
Good man, Dan.
Right?
Good man.
So there's simply what we're saying here is the US are not going to allow this. They don't want that data being going across to the Chinese government. Cars are a data goldmine.
Yep.
So there's an article here by the ABC.
Look, it's
headlined, "Cars are a data harvesting machine. These brands share your personal information."
You should see what they get all the details off your phone. As soon as you plug in, as soon as you go into your car system, that's it. They can read everything. What you buy at Woolies, all sorts of stuff. It is unbelievable.
They're going to see your nudes, Tommy.
Now you'll have to delete Pornhub again, Tom.
Mate,
But on a,
are you kidding me?
why are you blushing, Tom? On a serious note, it's really important. And that's why I say this is, this is a really big thing because everything that's got a computer chip has the data. And now that we've got AI, they want all that data so they can train the AI, right? And so the more they know about you, the more they can train their models to target you, to sell you stuff that, Tom's been reading a lot about baseball, right? Let's get an advertisement for baseball bats or, hey, join a baseball club or something, right? That's what I mean. That's what they do, right? And they get that information from your phone. Yeah. Like it's just Google search stuff.
It's wild. Like I jump in my car every second Saturday. So every second other Saturday, off Saturday that we're not doing the podcast, my phone it comes up saying, do you want to go to X place? It's not here. But every second Saturday, I jump in the car and it's like, you need to go to Harness Creation and do the podcast.
Yeah, go see Dan.
Jesus.
It's I know.
And you're running late, Jacob.
Again, yeah.
But honestly, go in and read that article because it's a head spinner in terms of, and we've been talking about this for a little while. So that's an I told you so, folks moment. But the US is not going to allow cars into the United States where they can steal data, even on national security grounds, right? Anything that's got a chip in it that's moving and the Chinese government can have access to, or the American government, quite frankly, that's, as I say, that's a data gold mine, right? And that's why I say, if you're going to make cars in Mexico, that's okay, but they're not going to be Chinese owned. Because the Americans are saying, no, if they own that company, they get access to the data. Right, end of that. That's not happening. Right, and that's why I think it was last week we talked about the US have said we're banning Russian software and Russian and Chinese software and hardware. And the Chinese will retaliate and the Russians will and the Europeans will and next minute we're all deglobalising and that's the way it works.
Crazy world we live in.
Well, it's going to be really, really turbulent, I think. I think we've got to be honest and say, look, there's Russia, Ukraine, now the North Koreans are fighting in Russia. Hello, that's not real good. You've got the Middle East on fire. You got China buzzing around Taiwan. Like, honestly, you look at it and go, yeah, it's okay, mate. The stock market's booming. It's like, holy dooly.
As long as they're making money.
It's at a point where you don't even bat an eyelid now.
I know.
When you hear there's a war.
Yeah.
And in all the finance pages and things, people see war as a buy signal, as like a bullish signal.
Yeah.
Like, apparently that's
bullish
really
defense.
bullish.
Yeah.
So
I'm bullish death.
Ridiculous. There's people fighting for their lives. And it's time to buy.
Yeah.
But you have a look at it, right?
So cool.
Let's go through it. The US stock market is currently at an all-time high. Okay? The CAPE ratio is, what are you looking for, Tom?
My coffee. I must have left it out the front.
What's that one there?
That is Jacob's
There.
double parked coffee.
That's my second one.
Oh. Anyway, where were we, folks? Back to our normal programming.
War.
Righto. But honestly, you have a look at it. The US stock market CAPE is at 37.5. Okay? The current PE, which we're going to talk about next week, is at 30. Right? The average is 15. Okay? So that's double the average. Gold price, all-time high. Right? US stock market, all-time high. NASDAQ, all-time high. Okay, cool. Bitcoin, all-time high. It's 68 or something?
68 now. I've just rebalanced.
Okay. 68. Bitcoin's all-time high. Gold's at an all-time high. Stocks are at an all-time high. And bonds are at about 4% or something. Right? Australia is even, like the S&P 200, all-time high. Right? Pile in, folks. Best of luck. But, I'm being serious. You look at that and go, hang on, the whole world is batshit crazy with people buying stuff.
Yeah.
Property in Australia is 13 times income. Canada's going gangbusters. Like, you just look at it and go, oh, man, there are so many red flags. It's hard because like you said, Jacob, how'd the stock market do? It's going great.
Yeah.
China last week, 25%, like fantastic. It's euphoria. which you very rarely get to see. And I can tell you guys, you don't see this, often. And when you do, it's the greatest lesson you'll get because you'll go, man, that was a hell of a ride.
Yeah, but play it properly. Hold on to the money you make.
Absolutely.
Yeah.
Well, the bonus this week, can you whack that up, Jacob?
Sure,
the bonus this week is the average of 4 valuation indicators, right? So we're at the 3 standard deviations
Above the
average, right?
Yeah.
So I'll tell you what I did last night. I was looking on YouTube and I saw some stupid video of a talk show where Shaq, Shaq, the baseball player, the basketball player.
Big Shaq.
Shaq?
Big Shaq. Yeah.
It's Shaq, isn't it?
Yeah.
Right. Mate,
You mean the cricketer?
he is enormous.
Yeah.
He is unbelievable.
Is that what you learned?
Well, only because when I looked at him beside
I
a,
know where
quote,
this is
normal
going.
person,
Yeah, the average.
I went, Jesus Christ, he's bloody, 7 foot, and he'd have to be 130 kilos.
More than that, I reckon.
It's
Probably
insane.
a lot more than that.
But what I'm saying is, that's where we are at the moment. We're all Shaq, right? We're all going, yeah, it's cool. And we're saying the people who come in after him are going to be just as tall or just as big.
Yeah.
You're sitting in a cafe and there's 57 Shaqs there.
Yeah.
And you're going,
And you're expecting more Shaqs to walk in.
Yeah, okay.
But I'm
When
just
you put it like that.
Well, but that's what I'm saying. That's what it's like. 3 standard deviations. The average height's 175. I know because I'm 175. What's Shaq? 215 or 210 or something?
I don't know, but I just love that that's how your brain works.
It's more likely that
Is that a compliment or is that
I'll take it as one.
No, it's
I'll
a
go
big
for
time compliment.
But that is a really good way to look at it, right? Because
Yeah.
mean reversion is counterintuitive. Yeah. So you say, how do you figure it out? Well, that's like you're at a party and the normal height is Steve Moriarty. He's surrounded by all these, Shaqs, and there's more Shaqs coming in. You're going, yeah, but at some stage they've got to start reverting, haven't they?
Yeah.
They're more likely going to see some dwarves coming in next.
That's what I mean. That's what I mean.
The cafe next door is full of dwarves.
It's a Shaq show. Right, what do we got? The short story.
You've felt me off guard now. No, you can't go to America.
Why not? Because the Chinese authorities are demanding a growing number of school teachers and other public sector employees hand in their passport.
Yeah, they're not letting teachers or anyone that can kind of grow their economy leave.
You're going to see more of this.
Yeah.
They want to hold on to their talent.
I'm telling you, you're going to see more of this because the developed world, hands up Australia, we are raiding other countries and saying skilled immigration. So we're going to India and going, give us all your doctors. And the doctors are going, fantastic, I'll go to Australia and earn 300 grand a year. Mm-hmm. Right? Well, at some point, I reckon countries start saying, nah, you're staying here.
Yeah. Well, 2 of my mates have just come out literally this week from the UK. They're both electricians to Australia.
Yeah.
Awesome.
But you think of the UK. Now the UK goes, hey, we're all the electricians. Oh, mate, they're over in Australia.
They're earning double in Australia. Because the wages in England are absolutely shocking.
Wanted to follow Jacob.
Trendsetter, mate.
Private equity,
Just
mate.
a leader.
Private equity, they're all into
Natural
electricity.
leader.
But on a serious note, it's that's what's going on. This is why Australia is piling in the immigration because our demographics are terrible. 1.5, which means we're not replacing ourselves. So we've got to get people into the, we either got 2 choices. We either say to the girls, listen, girls, you've got to stump up and have a few kids, and men as well, or you can say we've got to import people. And everybody's importing people. Canada is doing it, right? Australia's doing it. England's doing it, right? Ireland's doing it. Ireland has about 5 million people. This year, the last 12 months, they issued 700,000 passports. Right? You know what they're doing? They're giving foreigners passports, right? Because they need the population. Right? And this is what's going on in Australia. That's why our population's going through the roof because we looked at it and said, listen, guys, we've got to start doing something long term.
The Catholics aren't pumping kids out anymore, apparently.
Well, no one is.
Yeah, that's true.
You can't find a bloody room to do it in because the housing's too expensive.
Let's do it in the bush.
Buy a 4-wheel drive. Not advice.
Well, okay. Well, that's one to keep an eye on.
Righto, deficit for the long term. Yeah, blah, blah, blah. Usual story.
Just
Come on,
talking about
Albo,
debt.
spend some money.
Yeah.
He did.
Deficit's good thing.
Yeah.
He paid $4.3 million for that lovely place on the cliff tops.
Oh, I did see that. Yeah.
Oh, good call,
And
Albo.
that's the reason that property will never crash. That and the Olympics.
That's right. How long? Only another 8 years now.
Ciao.
Ciao.
Consumption is still rising.
The
Do we
green
have the ciao?
transition.
Graph.
have the
Geez, you've been weak on the graphs. Buy coal. There you go.
And just energy in general.
There you go. Coal's rising.
Not financial
Stop dreaming
advice.
that it's going to be wind and solar.
Not financial advice.
Well, wind and solar is what, 4 or 5% of all
Yeah, 3 or 4%.
energy consumption.
But we're going to transition to net zero by 2050.
Just turn the whole thing off.
Well, no one says how. Right. Oh, right. How are we going to do that? Oh, we're going to have 500% growth in solar for 25 years while oil declines, but it'll all be orderly.
Yeah.
It's like, no.
Oh, they're saying, oh, we'll just find the countries. All right, just add it to their trillions of dollars of the debt.
Yeah.
Whatever.
That'll work.
Yeah.
Right, that's
it.
enough silliness for 1 week.
We're done. Thanks for listening. And if you haven't subscribed to The Week That Was, go and check it out. We've only been talking about it for 18 months.
Yep. And
There
the
you go.
blog.
And
Jump on the website, sign up. You'll know what we're talking to then.
Yep. And if you find Tom's coffee, please let us know.
I'd appreciate it. Cheers.
Stay up to date on our socials. Just search for Total Money Management on Instagram and TikTok. For your free investor personality assessment, go to totalmoneymanagement.com.au. And as always, remember, we don't provide financial advice.